Okay, folks, welcome to Sunday Night Futures Live. What we're going to talk about today is obviously the futures action. We're going to be talking about obviously the valuation of the market and the amount of debt that we have on our balance sheet right now and what the Federal Reserve is going to need to do to keep this party going. But there is going to be an event, and we talk about this quite often, that we're going to, we're always looking at the pins that are out there that could prick this bubble at any given time, and there are a lot of them. So the question is, what do we buy when the bubble is pricked and we begin to bottom out? What new sectors, what industry groups emerge out of the ashes? And we're going to talk a bit about that because I did a lot of research over the weekend into multiple areas, but there were two that I narrowed it down to that I find very, very interesting, with some really great companies that are out there and are already making money. And these industries have yet to come into their heyday yet. So it's very early stages of their evolution. And so we're going to talk about those today as being places where we want to put money to work, maybe now, maybe right after we get the correction in the markets that we're expecting, because we're going to expect what were the prior leaders of the last bull market usually aren't the same leaders of the next bull market. Industries change, technologies change. So we're going to talk a little bit about that today. Then we're going to talk about chart requests that were submitted. And for those that are not on our list, head on over, use that link below, join up our public forum. It's free, no credit card required. Enter your symbols right here, right under this icon. And for a small fee each month, if you join the annual level membership, you join the Bull and Bear Banter chat room. Great people, great conversation, great information being shared. Costs you about $6 a month for an annual membership. So really cheap, dirt cheap, cheaper than dirt, in fact, for great value. Okay, so let's get to it. Let's start talking about the futures action. We have a new futures contract which is opened up. It's kind of make things a little bit confusing. We're showing is down at the open, but we're not. We're up. I can't get the futures here. Let me do this. All right, so we had a close on the SPX futures of 60.51.09. So clearly a gap up here at the open. We are not down. We are up at the open. Let's take a quick look at the NASDAQ. NASDAQ also gapping up. New futures contract here. Dow futures. Dow futures up very nicely here. So a very, very strong open here. Mid caps. Again, folks, you may be seeing this percentage down. That's confusing because we have a new futures contract which is opened up. So technically we are up at the open here. So strong showing. Let's check in with the Russell 2000. Moving up very, very nicely. So across the board, a very, very strong open here at the open. Let's take a pause. Let's say hello to folks. We only have 8 people on. I've never seen it so slow. Let's change this. That's better. Okay. Quiet night. There must be a football game on or something. Oh, now it just jumped up to 22. Okay. There's a lag here. Clearly a lag. I don't think I'm getting the comments. I got to go over to YouTube. Folks, if I haven't responded to your comments yet, it's because I'm not showing them on my software. I need to go to YouTube, take a look there, because I've never seen no comments before, ever. Ever. And there we are. Beautiful. There's all the comments. Crazy. Okay. Seymour Rivers. Sorry, I can't show you comments because I'm doing this on the YouTube. Audio is very good. Thank you, sir. Tim, good to have you here, my friend. Polish Taco, hey, good to see you. Trader Isaac, Coin, I got your request. George, welcome. Mr. Pete, good evening to you, my friend. Larry, Jedi Kid, best Christmas gift to buy year 2025 Camry TRD Fun Driver, mine 37K. Camry, a great car. Enjoy that ride. Mine is showing 20 watching at this point. Yeah, it's moved up to 24, but I'm not showing the comments. There was a clear lag on my software, and they want me to resubscribe. I won't be doing that because I canceled them. And I still show not a single comment on that software. So I will be switching fairly soon. Franklin, welcome. Jody, welcome. Bonnie Bean said there's 21. Yeah, we're starting to fill up now. It's slow. It's still even at the low 20s. We just jumped up to 25. That's a very thin evening so far. So if I can ask you to like, subscribe, you know the deal. Helps me out with the YouTube algorithm, and we can get more people in here. Okay. Let's get back to the futures action. Now, over the weekend, we had some news out of Europe. France's credit rating became an issue. We'll talk about that more in a moment. Let's check in with the dollar. I'm very surprised to see this. I did not expect to see the dollar down. It's showing us up here. That is wrong. We are down relative to the close here on Friday. Let's check in with the euro. If the euro is rallying, it means the news out of France was priced in, and yep, it was priced in. Okay, just goes to show you, don't buy the news. Wait to see how the market reacts to the news because it may have been priced in, and sure enough, it's been priced in. Interesting. Let's check in with yen. Yen moving up. Wow. Good move here. Let's go to a 15-minute chart. Get a better vibe for what we're doing here. They tried to take it down at the open, and they reversed it. They just took out all these stops. I think we're going to move up higher. This is one of my favorite candlesticks to see right at the open. 15-minute reversal bar. They had an agenda going into the trading session, and all of a sudden that agenda went poof, up in smoke. I think that yen is moving up higher. That should fire off before we sign off tonight. Let's go back to euro for a second, 15-minute view. Same deal here. If we close out within the next 3.5 minutes, this candlestick at its high, at the current high or higher, I think that we're going to take out that 15-minute candlestick the next 15 minutes. So we're looking for higher highs on yen, euro. That would signal lower lows for the U.S. What does that mean? It means that after getting pounded last week, the gold stocks, if we get a real serious sell-off in the dollar on this news out of Europe that has not impacted adversely the euro, that we may want to be looking to buy the dip on the gold mining stocks. Just nibble, just nibble. It's not seasonally favorable for those names yet, but they've been beaten up. So it may be time to take a look if the dollar begins to correct. But net on a weekly chart last week, the dollar still looked very, very strong. So jury's out. Let's check in with the 10-year yield. Yield's coming in here just shy of 1/3%. This could be one of the primary reasons as to why you're seeing the broad-based rally in the equity markets. The trend on this 4-hour chart, yen just made new higher highs. There you have it. They just made new higher highs. Look at the Bollinger Band squeeze, 15-minute time frame on the yen. They're selling strength here, but volume appears to be very good. You have a nice Bollinger Band squeeze setting up. Let's get back to the yen 4-hour view just to drive home a point. Even though we're down at current on yields, the trend is clear. It's defined on a 4-hour chart. It is up. We have not broken it. Therefore, the path of least resistance on yields remains to the upside. Back to a 5-minute chart. Let's check in with precious metals. Precious metals is measured by gold, down about 1/3 of a percentage point. Let's see whether or not they try to rally this on the weaker dollar. Looking at silver up. Let's take a 15-minute view. Look. Yeah, nice Bollinger Band squeeze. I think silver is going to break out higher. Let's see if they take out the prior high here. We're not that far away. They're going to take that out. They're going to take it out about come on. You know you want to do it. Come on. There we go. New higher high on silver. It's going up. Palladium, same deal here. You're seeing strength in the metals. Platinum, up over 1/3 of a percentage point. Industrial metals, copper, not much happening here. Let's take a quick look at energy. We have a position in natural gas. Sunday nights is usually a pretty volatile night for natural gas, but let's begin first with oil. Now, they tried to spike this, which failed. Now, I already have an alert set up there. Let's set up another one. If they take out this session high, which I'm not predicting that they're going to today because it doesn't look all that bullish, but if they do, it's going to be game on for oil. And we began bull operations last week, small position on energy stocks. They're really gotten beaten up. XLE is in a descending wedge formation. If they beat it up again tomorrow, Tuesday, then we're just going to start stepping into the breach, buying with blood in the street, and enjoy the rally back up higher, which is inevitable. So you need oil to move up higher. At current, it is down. I'd like to see it reverse here to move up. But if it doesn't move up, if it trades down into tomorrow, that could provide us the opportunity to buy energy stocks at a cheaper price because energy stocks are so correlated to the price of oil. Oil's down, those stocks go down. So usually, not all the time. Let's take a look at natty gas. Again, we have a position here. I sold some covered calls on our position in Boyle last week. We're opening down 1.4%. And the good part about selling covered calls out of the money is that you really don't care. You know, you're collecting premium. So it's all good. I'm very bullish on natural gas. We'll talk about more in a moment about why we're bullish on natural gas. I think it's the future of energy. And we have so much of it. What else do we need to go over here? Let's check back in quickly with, let's take a look at EMD, emerging markets. Strong move here and the holding gains. Let's take a quick peek at cattle. Cattle last week hit all-time record highs. Huge move. And it looks as though it's going up higher. Taking a look at corn. Corn had a very good week last week. A little bit of a fade off the highs. We are opening up 0.11%. So agriculture appears to be coming back to life a bit. Unfortunately, it's inflationary. ZW, wheat. I had a lot more hope for wheat last week than what we got. We had a reversal week on wheat, so not so bullish there. It's just consolidating. ZS is up at the open here. This is soybeans. Now, soybeans broke out last week, pulled back to do a retest. I would be a buyer of soybeans on a rally and a close above the 21-period EMA in orange. You could sell puts here. You could generate cash flow. I think the bottom is in for these names. I mean, you take a look at all these stocks, or excuse me, all these commodities, they look pretty much the same. They stopped going down. So you could sell puts. I don't know if I would sell calls here because once these things get moving, they could really rip your face off. But I would, given the fact that we have a very strong base below, I'd be fine with selling puts here, generating some cash flow. And if you're going to sell premium here, I would stay around 20 deltas and no closer. You know, if you want to go 15 deltas to be safe, fine. What else do we have here? I think we're good. I think we covered it. Gasoline prices, they rose last week. And we have a base that's formed here. I think it's unfortunate, but I think we're going to be seeing in the very, very near future higher gasoline prices because I'll tell you right now, if we break out, this is the RBOB gasoline futures contract. If we break out above 2.18 the gallon, that would be a significant breakout. That, in fact, it would be one that would force a lot of shorts to cover. Let's take a look at CL, the same deal here. See the base? We've stopped going down. We're getting ready to move up. So you have your W formation. Here's the left side. Here's your pivot point. The top of that pivot point where shorts are going to cover is right here. Let's call it 78.50 the barrel on oil. We break through there. You could see a rally up to $85 a barrel like that, and that will not be good for the equity markets. All right, I think we covered it all here. Let's say hello to folks. Jody, did I see Emily just shoot up? Yes, I did. That's the new contract. Weldon Lamb. Hey, Bob. Good evening, all. Hope it was well. Same to you, Weldon. Thank you for being here. Ben Gormley, hello to you. RK, thank you for that. TZ Burton, welcome. Okay, let's get to it. Let's talk about the week ahead. Again, folks that just joined in, join the Contrarian Trader Public Forum. Link below. In fact, what I'll do is copy the link, send it out there, sign up, no credit card required. And folks, this is sponsored by TrendSpider. If you're looking for software that's going to help give you an edge over other traders, folks, you should be using TrendSpider, automated technical analysis, scanning tools that I use constantly, alerts that I use constantly. They have now predictive AI. I have one member that just joined up. He's using the bots now. I haven't even figured that out, but a lot of value being offered here. Back testing for strategies, custom built studies and indicators. Automate your trading orders. You can plug it into your brokers. I think they're all hooked up now with Interactive Brokers and several other ones. So sign up, please. Take advantage of my 35% discount. It's below on YouTube, above on Twitter. Head on over, take a tour of their site, and take advantage of that discount code as well. Sign up as quickly as possible. If you're not using it, it's like you're an archer and you're missing an arrow in your quiver. There are a lot of traders out there using this type of technology now. It's not just a want to have or a nice to have. It's a gotta have. So please, your competition is using it. You should be using it as well. Let's talk about the new trading week and the economic data that we have coming out. We have really no earnings per se that we're really going to be concerned about. Maybe FedEx. Does FedEx come out this week? So on Monday, we get the Empire State Manufacturing Survey. We also get S&P Flash U.S. Services PMI. Okay, so this reading here is important because it's in expansion. If you're wondering why our GDP is growing, it's not because of manufacturing. Manufacturing has been in contraction for about 2 years now. Services is expanding. Any read above 50 is a sign of expansion. If we get a read below 50, that's a very, very bad thing for the economy. I don't think it's going to happen. Watch out for manufacturing. We're very close to crossing above that 50 mark into contraction area. That could, if we get good news on that front, that could throw a little bit of cold water on future rate cuts. We're going to get them in December, but January may be put into question if you see expansion in manufacturing. I don't think we're going to get it, but it's out there. Tuesday, we get U.S. retail sales, industrial production, capacity utilization. That's basically how much of the industrial production is being utilized. Wednesday, housing starts, building permits. That's a forward-looking indicator. And of course, on Wednesday, we get the FOMC interest rate decision. we'll go to it in a moment. They're going to cut. Okay, it's a foregone conclusion. We get U.S. leading economic indicators coming out on the same day on Friday. We get personal income. And of course, we get PCE. It's PCE time again. We just got CPI. We just got PPI. And it seems like we just had PCE. It's already been a month. This is the Federal Reserve's favorite measure of inflation. It comes out on Friday. So a very busy week and a lot of opportunity for volatility. And in terms of earnings coming out this week, I was accurate in that we are going to get FedEx numbers coming out on Thursday. That's the only one I see here that is significant, that can move the market. And FedEx can move the market. Valuation of the equity markets. We are the second most expensive in terms of the Shiller PE model, the second most expensive on record, other than the 2000 financial crisis, the 2000 dot-com bubble. Now, on other metrics, we're above that level. So we have valuations of the equity market extended, right? And many people don't appreciate that. If equities are moving up and their fundamentals aren't supportive of the why behind their moving up, that is in and of itself a demonstration of inflation. Stocks are overvalued. They're very overvalued. In fact, bubble territory at this point. So if you're looking for inflation, look no further than your charting software. So what you're looking at here is a list of countries that are in rate cut mode. Eurozone, rate cut mode. United States, clearly in rate cut mode. Where are we? Right here. Cut. Then you take a look at this. Global inflation rates. U.S., 2.7% year over year. Whatever happened to 2% target? It's gone. It's gone. Inflation is moving up higher. What's the Eurozone doing? Same exact thing. Eurozone, where is that? Right here. 2.3% inflation. The trend is higher as it is here in the United States, yet they're cutting rates. You can't make it up. So I play this at least once a quarter because it's always important to remember what the words of the great Milton Friedman are, and that is that the federal government is the proximate cause of inflation. They will blame everyone else other than them. They will blame you for consuming too much because you're using credit card debt. They'll blame the big corporations for raising prices because their input costs went up higher and now they have to gouge the consumer. But why do they need to do this? It's because they print money. So the immortal words of Milton Friedman, let me make sure I'm sharing my audio. Let's try that again. Okay, it's going to bust my chops here. Only when I'm live. Under pressure. It's spooling. You're killing me. Okay, there we go. Finally. The immortal words of Milton Friedman.
Inflation is made in Washington because only Washington can create money. And any other attribution to other groups of inflation is wrong. Consumers don't produce it. Producers don't produce it. The trade unions don't produce it. Foreign sheiks don't produce it. Oil imports don't produce it. What produces it is too much government spending and too much government creation of money and nothing else. Inflation is made in Washington because only Washington can create money. And any other attribution to other groups of inflation is wrong. Consumers.
Okay, I just wrote down some symbols here, folks. I'm going to cut off the requests. If you're a premium member, I always take all your requests, but I got to shut it down. There's way too many, which is great. So the federal government is the proximate cause of inflation, and they are going to be the cause of this next round of inflation because they're cutting rates into a rising interest rate environment. The Federal Reserve has claimed victory over the last crisis, which was inflation. They've moved on now to create the new crisis. And what's the probability of a Fed rate cut this week? Guaranteed, 96% probability. Going out and into January, almost a guarantee. In fact, I have a chart. I thought I had a chart. I don't. Let's see if I can get that off of the Twitter. I have a chart that shows the expectations of the equity markets Here we go. So this is a chart of the expectation for rate cuts going out into 2026. We're in a rising interest rate environment year over year. And this is where they see the Fed funds rate going to in a rising interest rate environment. We spoke a lot about unemployment. The employment picture appears to be weakening. It looks as though that is what the Federal Reserve is looking to address now preemptively. I hope they're right. Because they're playing with stagflationary issues. And when you take a look at the expectation or the current valuation of the market, I showed you the Shiller PE ratio. I've never heard of this one before. It's called based on the Hussman margin adjusted price to earnings ratio. Never heard of it. U.S. stock valuations are at extreme levels. In fact, I think this is all-time highs. Yeah, right now, according to barchart.com, U.S. stocks are now the most expensive in history based on non-financial market capitalism. I don't even know what the word is. Non-financial corporate government gross value added, whatever that means. So I'll share this out. Do your own research. And I'm not saying sell stocks tomorrow, by no stretch of the imagination. Bitcoin. We didn't go over Bitcoin. Thanks, Trader Isaac. I know it was up over $1,000 today. Wow. Nice. Very, very nice. It is now stabilized above 100,000 a coin. Very, very nice. Good stuff here. All right, so while we're cutting rates into an inflationary environment, the Japanese and Chinese, they're no dummies. Japan sold $61.9 billion in treasuries in Q3 2024, the most on record. China dumped 51.3 billion, the second largest on record. Japan and China are the two biggest holders of U.S. government debt. They see what's happening here. So if you're wondering why the value of our bonds remains stuck in a bear market, and we're not seeing lower interest rates because the Federal Reserve is cutting rates, it's because these other countries are saying, you guys are out of your minds. You're out of your minds. You're cutting interest rates into an inflationary environment, and long-term debt is moving up higher because traders and investors are out there saying, we don't want to buy your debt and get paid pennies on the dollar for all the risks that we have to take. It's simple banking. Yet the Federal Reserve, torpedoes be damned, they're going to have to, at some point in time, go back to quantitative easing. This is what's setting up. The buyer of last resort is, in fact, the Federal Reserve. If these yields continue up higher, they will have no choice. They may need to create a crisis so that they can come in and act as the hero, because they lit this match. Remember what yields were doing back here before the first 50 basis point rate cut. They were moving lower. The Federal Reserve comes in, cuts rates, and what did the interest rates do? They went up. Tell me that's not broken. I think that was euro. Yeah, that's euro. Yep. New 15-minute higher highs for the euro. Dollar's going to take it on the chin today and tomorrow. Not ready to talk about that yet. A lot of action going. Gold, wow, gold reversed. Gold reversed. Very nice. So the dollar moving lower is spurring on commodities. Let's just take a quick peek back at oil. Oil remains down at current. Are we off session lows? We are off session lows, though. So buckle up. Buckle up. The inflation picture is unfortunately looking pretty bright tonight. And I think that's going to continue to drive Bitcoin up higher. Tom Liu, what is your plan for incoming January crash? Plan to be safe, 60% and 10% gold. So we already have gold. So I'm covered there. I have bonds, which have not been treating me well. But we know that from the uninversion of the yield curve that when the crisis hits, bonds generally go up. Also, if you get an announcement out of the Federal Reserve, you don't even need the announcement. There'll be an anticipation of the Federal Reserve coming in to buy bonds. If we do get a real serious shakeout in January or beginning of the year, then you'll see bonds move up higher. So I'm going to carry at current bonds, gold, silver, and I already have a short position, small short position on the triple Qs. I'll add to that position and I'll keep the rest in cash. That's it. So with yields moving up higher, take note of this, and this is why the Federal Reserve is probably going to have to go and start QE again. And for those not familiar with what QE is basically the Federal Reserve, rather than Treasury selling securities out to the open market, they're selling it to the Federal Reserve. the Federal Reserve's balance sheet gets swelled up again with U.S. Treasuries. About $500 billion in CRE mortgages, those are real estate mortgages, commercial real estate mortgages, will mature in the next year. And a significant portion of them are going into default. Florida Atlantic University's Cole said there are going to be fire sales. They're going to be put more downward pressure on commercial real estate prices across the board. This is why the Federal Reserve needs to go in and buy the debt, because the institutions that have exposure to these commercial real estate delinquencies here in black, those are your regional banks. And they've been doing fairly well of late, along with the other banks, the money center banks, but they're way too exposed to this sector. And you may see a downward move on the regional banks, and that will hurt the the small cap stocks. To have the small cap stocks move up, you need regional banks and you need biotechs. Biotechs took it on the chin last week. If these regional banks see another week of higher highs on yields, I don't see how they rally. I would avoid these small caps until that is resolved. Once they go into QE mode, you got to buy small caps. Natural gas, not nuclear, it is going to power North America's future. I've believed this for the longest time. We already have the answer. It's a clean energy. We don't need wind. Wind is one of the worst things for the environment out there. It's killing whales. To produce, they only have a lifespan of 20 years. To produce them requires a ridiculous amount of copper, materials, mining, and you're hauling these things with trucks and erecting these things with trucks that use oil. To maintain a windmill, you need to lubricate the windmill with oil. So it is not environmentally friendly, and it's killing whales. So natural gas, I think that the chart of natural gas has clearly bottomed. We are long of it. In fact, we're long using Boyle, but I'm going to use the non-leveraged product. Let's take a look at it in fact, the quarter is almost over. Let's take a look at a quarterly view of natural gas. And it's just stopped going down. This is the first thing we look at. Has the product or stock or whatever you're trading, cupcakes, it doesn't matter. Has the value stopped going down? Check that box. It stopped going down. And it looks as though we're getting ready for a move up. Now, the continuous contract, I don't know why there's such a deviation here. The continuous contract This is not what I'm looking for. Yeah, it's not what I'm looking for. I went over this on Thursday night, and there's a clear divergence between the ETF I can't find it. I don't want to waste your time. But the continuous contract is showing up on the quarter, whereas the ETF is showing is down. So we did, we already spoke about this, Moody's cuts France. I wanted to talk about natural gas for a reason, because I did a lot of research over the weekend about sectors that would be the next area of growth. The next, somebody just put in here, what's going to be the next Microsoft or Google? Roclo. So I did some searches on ChatGPT, and The sectors that popped up were clean energy revolution. I'm not a big believer. I'm just not. Space commercialization, quantum computing, synthetic biology, Web3 and blockchain. I am a believer in that, but it's already established. Healthcare tech, this has already been running. Illumina is a leader in that group. Metaverse, I don't believe in it at all. I don't think that Meta has done much with it. They've invested a lot in it and they've lost a lot of money with it. But I see this as a hell on earth for people, so I wouldn't invest in it. Being in the metaverse, I don't see the value. Cybersecurity, this is already established. So how do we narrow this down? I think we narrow it down to two. I like natural gas for clean energy. We already have that. Check that box. Space commercialization and quantum computing. If you ask me what a quantum computer is, I don't know. All I know is that there's a space race between us, China, Europe, to get into this space as quickly as possible. And there are going to be military ramifications. So it's essential that investments be made in this area. The same thing holds true with space commercialization. Now, SpaceX is not a publicly traded company. That, however, is here's the valuation of SpaceX. $350 billion already, and it's not even public. But there is a plan to make it go public. So this would be my favorite were it public. It is not. Rocket Labs is my favorite in this space. So let's talk about this one. It's in the aerospace and defense group. I would not include it in that area, but okay. It's number 20 in that group. I think this isn't a group in and of itself. Now, it's under accumulation. The group's relative strength is a B+. We own Boeing. We know that. We did really, really well last week. Relative strength is 99. This stock is on fire. Is it making money yet? No. Would I buy it here? No. Let's check out the chart. It's pretty frothy. I still think it can go up higher. Don't get me wrong. I like the daily chart. We just took a peek at that. It's probably going up higher. But Rocket Labs, this is coming out of a long-term consolidation. And I only wish I ran that search a couple of months ago because I would have been buying it down here hand over fist. But it's already exploded up higher. At some point in time, we're going to get a shakeout in this market. You got to keep a list because I'm an optimist. I'm optimistic on the future, and space commercialization is the future. It's where the money is flowing. China, the competition is heated. We can't afford to lose the space commercialization. Neither can China, neither can Russia, neither can the Europeans. But right now, we are the leader in the space using SpaceX, which is why they wish they were public. If you wanted to play another play, it would be space, but that's tourism. This is Virgin Galactic. Let's go to a weekly chart. This is setting up nicely, though. This has done nothing. This could be bought. This looks a lot like Rocket Lab's chart a few 2 months ago. So Virgin Galactic is looking really, really sweet here. So bullish on SPCE. I may be buying it as soon as tomorrow. Daily view. So you can see this is the AI-driven support and resistance levels on TrendSpider, and we're bouncing off the support. I think this is a buy right off the bat. bullish on SpaceX, Virgin Galactic, sorry, SpaceX. RKLB, I don't know why I can't remember that symbol. This is looking good here too on a daily time frame. If you're looking to trade it, no matter what I say, buy the breakout or the retest. We'll get it. So Rocket Lab's looking pretty good. Our alert is set. Set and forget it. Now, the other area that I think is very, very interesting is quantum computers. Now, a lot of people may be thinking about AI and why not go there? Well, the money's already gone there, really. And if you take a look at the data centers, the build out is already here. Take a look at the data centers in the United States, 5,381. The second closest is Germany at 521. We are the leader in this space. So all this data is going to help drive these markets up higher. We are the leadership name in this group. And what do all these data centers need? They need energy. What do we want to own? Natural gas. We already have it. It's the infrastructure is already there. It just makes sense. So we'll continue to buy natural gas because we know from the past when you get that uninverted yield curve and stocks go like this, the yield curve goes like that. What else goes like that along with bonds? Natural gas. So quantum computing and space commercialization makes sense. So what do we like the next go around in quantum computing? I like IonQ. Come on. IonQ. Let's take a look at a monthly chart to see where we've been, to identify where we may be going. This is a major, major breakout. It's extended. Can I chase it here? Probably not. We haven't put in new weekly higher highs, closing highs in a couple of weeks now. Well, at least last week we didn't put in a new closing high. We kind of stalled out here. We have a Bollinger Band squeeze setting up on a daily chart. Looks interesting. But we're looking at this stock in context of what we want to buy when we get the shakeout in the equity markets here in the United States, and what do we want to be buying? IonQ and Rocket Labs, another one that I like in the quantum computing space. Before I leave Rocket Labs, IonQ, let's take a look at the fundamentals. Again, they mix these names in the computer hardware peripheral group. It's number one in that group. It's not making any money, but look at the sales. Last quarter, sales grew 102%. 3-year sales growth rate, 221%. No debt. Means they have some big backers. Group relative strength is a 99. You can't get any higher on that. It's under accumulation. So this is a great, great company, and one that I think is going to be the future of quantum computing. And you may be asking, why don't we go for Google? They just came out with the Willow chip. They're obviously a major player along with IBM. But the way to look at this is that if you want to get the bang for your buck out of the quantum computer space, you want to get the purest play possible. So the question you got to ask yourself is that what company is going to give me the most exposure to quantum computing? With Google, you're buying all their other assets. Quantum computing is not going to make up a big portion of their profits for a long time. Whereas IonQ, that's a different story. That's a pure play. Once they go profitable, then it's going to be all in on quantum computing investment. Money's going to float there into Google as well because it's going to be a safer play. However, if people want pure exposure to quantum computing, IonQ. Another play in this space is RGTI, Rigetti Computing. Here's the monthly view, and this thing has just begun to roar. Big breakout, early stage breakout. The fundamentals here. Earnings per share change last quarter, 53%. EPS percentage change current quarter, 31%. Their sales actually dropped last quarter, but this is our second favorite in the quantum computing space. So those are three names I think are going to be great plays along with natural gas into the next bull market. Jody, NVIDIA is building a quantum AI computer in Denmark. I heard it will help the Danish king. Okay. Dane, hey Bob, what would your play on natural gas? I know one specific company. I trade Boyle. It's a leveraged product. It's very, very volatile. I just want to buy the underlying, the commodity, because it's been so beaten up. I think that it's due for a rally back. And once that rally gets rolling, I mean, again, I'm going to point you into the direction of what's happening with energy demand. It is through the roof. These data centers need cheap energy, natural gas. It's not going to be, solar technology hasn't evolved in 20 years. Wind turbines aren't going to do it. You're going to have to use existing products. I think natural gas is the way to play it. We own Boyle, and we've sold covered calls, out of the money covered calls, going less than 45 days to expiration just to generate cash flow and act as a hedge. Roclo, you're very, very welcome. All right, let's do some chart requests. My voice is beginning to go. I had that thing that's been going around, and I got better, but it feels like my voice is starting to go again. Okay, first up, ARGT. Globex Argentina Fund. That's a good one. Monthly view, this has been exposed. Argentina under new management. It's very frothy. What's RSI look like here? Yeah, I think this horse has left the stable. It's probably going to go up higher until it doesn't. I wouldn't initiate a new trade here. I would, I don't know if this is optionable. Maybe you want to sell puts, sell a iron condor or strangle. If I were long of it, I would set up a trailing stop loss order, 5% trailing stop, 7% trailing stop, and let the market take you out. Looks like it's going to go parabolic. Daily view. RSI is around 74. I mean, this is an ETF. They usually don't keep RSIs this high. I'm bullish on Argentina. I think the new president there, I'm a big fan of his. Great work. He's a Donald Trump of South America. He as a matter of fact, I hope Donald Trump does half of what this guy did. I mean, honestly, he really helped out that economy tremendously. Brought inflation down from like 25% to down to like 2%. It's ridiculous what he did. All by cutting government, which is exactly what we need here. So I like this. If I were long of it, I would stay long. But I would use a trailing stop loss order. Let the market take you out. It's probably going to continue up higher. If you're bullish on it, fine. I would have no problem with anybody buying it. Just use that trailing stop loss order. JD, Chinese stock. Weekly view, bearish key reversal last week. What's seasonality look like here? December's not the best month out of the year. Wow, this is interesting. But January is by far the best month out of the year for JD.com. So the last week of January over the past 11 years has been down 40%, has been up 40% of the time. The however is that the first couple of weeks of January look very, very favorable. So I'd be a buyer on any weakness here on JD. And let's drill down further. We had a bearish reversal week last week. Ideally, we pull back to this 20-period moving average at around $34 per share. Let's take a look at the daily view. Daily view, you have a Bollinger Band squeeze, which has begun to fire off. I think this is going up. If they try to do a liquidity hunt here, meaning they try to take out stops before they take this thing up higher, you'd have to hold your nose and buy that dip, because it's going to look pretty ugly if they do a liquidity hunt like they did back here. But if you bought that dip, you would have been rewarded. That's the play here. I think they're going to pull it back further. I would buy the dip. I think JD is going up higher. Bullish. XBI. This is the home builder ETF. Biotech ETF. I don't like this space. I don't like it because I think there's going to be a lot of change over in DC, and nobody knows what that change is going to look like. You have RFK Jr. coming in, and he's going to come in like the wrath of God. So I think that investors are very concerned about this space, as they should be. Now, usually it's not as bad as what everybody seems. So what I would do here is I would wait until, if they're selling this off into the inauguration, I would be a buyer into the inauguration. I would dollar cost average in, and I do think that we're going lower, because this week back here, the week of November the 11th, we had a bearish engulfing. We engulfed the prior week's move. We had a breakout point failure. We had broken out that prior week, failed continuation breakout. We dropped back down into this trading range, and then we took out the prior lows. That's what bull traps do. Then they rallied us back in an effort to try to recapture. It failed. Now we're moving lower. Watch for support levels at around 86.16 to ideally 84.92. Make it $85 a share. I think it goes lower, but then I'd be looking to buy on that shakeout. So a lot of indecision in here. The markets do not like indecision. Therefore, avoid right now. Buy at those price targets. HDSN. Hudson Technologies. I don't like it. It's going lower. This is a bear flag setup, and a very shallow one at that. We broke last week. They may rally it back up to 576. I think it fails. It goes lower. I'm not a buyer here of this stock. You have a Bollinger Band squeeze. The trend is down. Therefore, the probability of the squeeze firing off to the downside is highly probable. To me, it looks like a short. I will add, though, the automated trend lines are picking off that we did close at a support level, actually just below it. Just below it. We broke support on Friday. This is a short. CLS. Weekly view. Outside reversal bar, bullish reversal bar. Last week, we closed at the highs of the week. We're going to par at a bare minimum. And we're probably going a lot higher than that. Let's overlay The trend lines, none to be had. I would establish a price target on this stock. I think it could go up to 110 per share. CRDO. Expect resistance at that 110 per share mark. Credo Technology, weekly view. Very nice week last week. Closed at the highs of the week. Strong long consolidation. Stair-stepping up higher. Strong chart. Path of least resistance is clearly up. We broke out last week. Any pullback to 75 bucks a share, I'd be a buyer of the stock. And I would use 75.38 as my stop loss point. Maybe give it a little bit of room. But if it drops back down below that 75.38 mark and closes there, that means trouble. I don't think it's going to happen. I think it's going to do a retest, and you're going to follow through. It's going up higher. If it goes to 85 bucks a share, I think it goes to 100. APLD. Applied Digital Corp. No bueno. This is a failed breakout. What are the fundamentals doing here? Did they have earnings? I'm not understanding the price action. No earnings. They must have had a news event. I don't like this price action. This is an outside reversal bar. We broke support. We're going lower. Bare minimum, $8 per share. It's probably going to break that. How was volume last week? Volume rose to above average. So I am not liking this stock. I think it's going down. I would avoid it. How did it close on Friday? Very bad. So they dropped it here. Retest 1, retest 2, retest 3. This is a short. New daily lower low. Shorts are going to lean into that. They're going to take it lower. They're going to press it. Tesla, for disclosure purposes, we opened up a short position here, not of the common stock. We sold a call spread because I do believe it's going up higher. However, it's getting very frothy. So it was up about 3.5%, 4%. I said, you know what? Let's sell a call spread here. Bullish reversal bar on the day on Friday. Here's the weekly view. Very powerful move. We sold pretty much near the top of that move on Friday. On any retracement, I'm going to look to sell a put spread, creating an iron condor, but I would need to see a measurable pullback, ideally a retest. Do we have trend lines here? No, we do not. We're not going down to 300 per share. Let's get our crayon out, draw the lines ourselves. If we pull back to a round number around 400, I think that we would put on that put spread. And I think it's achievable. But it looks as though they're going to take this up on Monday. 15-minute view. Very strong close on Friday. They're going to take it up on Monday. Question is, where does it close? So bullish on Tesla, even though I have a short position on it. Coinbase. Bitcoin is breaking out. Therefore, Coinbase is going to break out. This is a leadership name. It's a monopoly. I like it. Not loving the candlestick. I love the story. The correlation with Bitcoin is undeniable. I think we're consolidating here. We have a Bollinger Band squeeze setting up on a daily chart. Bollinger Bands in red inside the Keltner channels in green. We're going up. Have a great night, Jody. Thank you for being here. You're welcome, Tim. Thank you, Franklin. Have a great night, my friend. Paul, same to you. Thank you. AMD. AMD can't get out of its own way. The semi space in general has not been performing well. AMD is the poster child of underperformance in this space. We broke weekly support last week. They're going to probably rally it up to 130, and it's probably going to fail. Now, one theory that I've had is that they may rally the semis into the new year. So that's a possibility. But I wouldn't be a buyer here yet. I'm not seeing it. I'm seeing a breakdown. I think they're going to spike it to 130. Then it's going to get rejected. Now, if it closes back above 130, it becomes interesting as a long daily view. This is not good. Horrible price action. Looks, it wants to go lower. How's volume? Big down volume on Friday. So down volume accelerating. That's not good. Snap. Bearish. Bearish on Snap. We're right at weekly support. We broke a support level at $12 per share last week. We closed just off the lows. I'm not bullish here. I'm bearish. I think it breaks lower. Momentum going in the wrong direction. Not what you want to see. Not loving it. I think that Snap, you need to avoid it. I think it's going to go lower. PARA. Paramount Global. Beautiful weekly Bollinger Band squeeze here, setting up. Momentum is rising. Good EPS change last quarter, 63%. 3-year growth rate, no bueno. EPS growth, current 254%. Wow. The shares are under accumulation. This is turned green. It's got a C rating, but this is turned green. Therefore, institutions are starting to move in. The group is favored. It's one of the top performing sectors. I like this as a Bollinger Band squeeze. Bullish, except for one thing. The daily chart, you had an outside reversal bar. They tried to break it out on Friday. They didn't. I would be a buyer of any pullback here because look, this is what they do. They do a liquidity hunt and then they take it up higher. I would buy the dips here. That's what I would do on Para. Folks, thanks for being here. Don't forget about the 35% discount code to TrendSpider. Link below on YouTube, link above on Twitter. I give it away free to our silver and gold level members. So please take advantage of it. We have a 14-day free trial offer. Everybody have a profitable trading week. Thank you for being here, and I will talk to you soon. Be well.